Special thanks for the panelists for taking the time to share their thoughts with us today, and GBG for sponsoring this webinar. Now, the Philippines have made a lot of headway in driving financial inclusion, with the Economics Intelligence Unit ranking it the highest in terms of improvements made. Now, despite the fact that there's been a lot of these major steps taken, nearly 70% of Filipinos still remain unbanked, and a significant amount of MSMEs still remain underserved. And without the data inclusion, financial inclusion is nearly impossible. Joining me today to discuss the role of alternative data towards a more inclusive Philippines, we have Joyce Suficiencia, who is the Director of the Financial Inclusion Office in Bangko, Sentral, Pilipinas. She's right on top of the screen there. Below her, we have Paolo Azzola, who is the Chief Strategy Officer of PayMaya. Below Paolo, we have Mayet. Mayet is the Senior Vice President and Chief Risk Officer of the Bank of the Philippine Islands. And last but not least, we have Dev Dimon, who is the Managing Director for Asia Pacific in GBG. Thank you all for joining us. Welcome to the show. So let's begin by taking a broad look at things, and I'd like to invite Joyce to go first. Joyce, why don't you give us a sense of the state of financial inclusion in the Philippines and the kind of progress that we've made so far in the recent years? Go ahead, Joyce, you have the floor.
Yes, so thank you. You mentioned earlier that in the Philippines, less than 30% of Filipinos have an account, and that's true. Based on our survey, indeed, less than 1/3 of Filipinos have access to formal account. We know that that is a basic indicator of financial inclusion. And this figure is undoubtedly low, especially if we compare this with our neighboring countries like the Malaysia and Thailand, which have inclusion levels above 80%. That said, the 2019 survey results also showed significant improvements in account ownership, especially among the poor, which doubled from just 14% in 2017 to 27% in 2019, which narrowed the gap in account ownership between the low-income and the high-income groups. We've also seen a considerable jump in e-money penetration from a mere 1% in 2017 to 8% 2 years later in 2019. We've also seen an impressive doubling of account holders who use their accounts for payment transactions, from just 18% in 2017 to 39% in 2019. These figures to us suggest that inclusion momentum has been underway even prior to the pandemic. Of course, we all now have an inkling of how the pandemic has accelerated and is accelerating the inclusion trend, as digital payments and with it account opening becoming a practical need and to some a lifesaver. So as some of you might know, last year, the BSP set a target of achieving 70% account ownership among Filipino adults in 2023. When we issued this target last year, it seemed like a bold target, but with the rapid digital shift that we are now seeing, the intensified collaborative efforts, especially in the government, we understand that we believe that the 70% target already looks like very much within our reach. So I'll pause there. Thank you.
It's going to be a very busy 2 years for you, Joyce, with the 70% target. Thanks for sharing your views. So let's move on to Paolo. And Paolo, I think, Joyce spoke a little bit about the kind of rapid rise in e-money and e-wallets. And I think that's, an area that you are deeply familiar with. So maybe you can share a little bit about the state of financial inclusion, the role of e-wallets, maybe even pertaining to how the alternative data from e-wallet could potentially contribute to financial inclusion in the Philippines. Paolo, you have the floor. Go ahead, share your views.
Thank you. But I think what e-wallets have done with the help of course, of BSP over the last 5-6 years has been really to provide a different platform, an easier platform to access financial services than was previously available. So today in the Philippines, you have about 1 in every 2 Filipino adults who has a financial account with an e-money issuer. So about 38 million, almost 40 million Filipino adults have an e-money account. And that obviously wasn't true 5 years ago. What that has meant is that we think that there's a much easier and broader access to more people. And obviously that helps both people at the kind of like top end of the pyramid, but more importantly, it helps include people everywhere across the country and across the nation. Now, financial inclusion to me is more than just about consumers. Financial inclusion needs to also be part of, or needs to be including merchants of all sizes. And while some of the largest merchants in the country have taken strides to really start accepting other forms of payment than cash, and to really do so both online as well as face-to-face, where we have seen the biggest growth since the beginning of the pandemic has been on the medium, small, and micro enterprises. And we've seen an increase year on year from March 2020 to March 2021 of 3,000% in the number of merchants that had been that we were onboarding. So we've really seen that if you're a small micro merchant, in order for you to continue running your business during a pandemic, being financially included, getting a financial account through an e-money issuer, through a bank, through whoever is easiest for you, is extremely important. And that, I think, closes the loop of financial inclusion. If you only have the consumer side and not the demand on the merchant side, then it's really difficult to close the loop of financial inclusion. If you have both sides working at it together, then that's really powerful.
Yep, for sure. I mean, bringing up the whole topic of merchants, the small, medium enterprises, literally the backbone of the economy, right? So those are important metrics to look at as well. Thanks for sharing your views, Paolo. Let's move on to Mayet, and think, Mayet could probably come in from a banker's perspective, and also, with your chief risk officer hat, you can also look at, how banks are measuring the risk of onboarding SMEs. Is there alternative kind of data you can use to onboard more of this category of businesses? So many topics I'm sure you'll be able to enlighten us on. Mayet, you have the floor. Share your views with us, please. I'm sorry, you are muted. Happens to the best of us, don't worry. Go ahead, Mayet.
Hi, good morning to everyone. Thank you, Vincent. From the BPI perspective, there's this very specific niche market we started through that path when we decided to bank the unbanked. Knowing, and to Paolo's point, that there are so many of us in the Philippines that are currently not enjoying the facilities of formal banking services. So we created our subsidiary called BPI Bangko. This is really a microfinance institution. Well, it is a thrift bank operating as a microfinance institution, where we really wanted to cater for a very specific target segment, and that's the self-employed micro entrepreneurs. As you know, the informal economy here is huge, and that is really, the micro entrepreneurs are really at the backbone of that economy. So we offer both the scope of banking services, from savings, which is normally your deposit-taking activity, and we also do loans. And primarily, Bangko, we really want to cover extending lending facilities for those who cannot formally borrow due to the absence of either a financial history to back it up, financial statements, which is the normal groups of lending out credit. But we're happy to say that we've seen, at least from 2019 until to date, we have about 145,000 self-employed and small micro entrepreneurs that have availed of financial services. Bangko really is a mobile phone-based bank, meaning our transactions are clearly done through the mobile phone most exclusively. While we have some 300 small branches, this is really just to provide help and support for customers primarily in most unbanked areas. So you will find us in the smaller municipalities and really outside of the suburban areas. We've disbursed about 18 billion in terms of peso loans to the microfinance institutions, numbering about 240,000 to date. And we have about 450,000 micro depositors. Now we have given a lot of the changes that you've seen, as Paolo has elucidated earlier. We need to make sure that we provide training, and we do it via webinars. So you have YouTube. We use all the social media channels to reach. Really, for now, what we've targeted is about 9 million by year end. We're at about 7.4 million as of June. We know that the 9 million target is kind of very aggressive at this point, but we've done about 7.4 million, reaching out to participants, giving them training and education and financial wellness, as well as financial inclusion. So the BPI targets about almost 500,000 of them by 2024, and hopefully we can really be there as an example on how we can provide services, not only for payments, not only for deposits, but the full gamut of financial services through our subsidiary.
Thank you, Maya. Looks like both you and Joyce gonna be having a busy year ahead of you. There will be a few.
I think the BSP finds us a little bit need more, so we need to give really more financial resources to that side of the business.
Okay, very cool. There are a few things that I would like to dive a little bit into later, particularly to the differences in your risk and data model. Just a quick point of clarification. You mentioned 18 billion pesos, 450,000 micro depositors. This is within what time frame?
This came from from 2017 onwards. So, but for the last 2 years, we have seen an average about 30% growth.
Very cool.
So it's slow to pick up because we need to make sure that there is education for clients to understand what we are there for and what we do. So we have about 300 branches nationwide, but you cannot find us in the big metropolis. We're not there. We're in the smaller municipalities, and it's because that is where we need to bank the informal segment of our society. So we're looking forward to doing a lot of partnerships with other fintechs, with e-money, e-wallet providers. We're partnered with PayMaya from the BPI side, from the BPI parent. So we work with, of course, the other side of the competitor, PayMaya, GCash. And we look forward to doing more partnerships. And I think when you have that, a microcosm or a community where you can really extend payments, you can extend deposit acquisition, you can extend lending, it helps really building up the financial inclusion base for the country.
Thank you for that, Maya. Appreciate your views on this. Let's move on to Dev. And Dev, I'm sure this topic is very close to your heart, considering your past decade of experience in your previous firm, where you are heavily involved with data, right? So maybe you can give us a sense of your views on the state of financial inclusion in Philippines, and you could also walk us through that some of the blind spots that you are seeing in terms of it being a roadblock to the Philippines financial inclusion journey. Go ahead, Dev. You have the floor.
Sure, Vincent. Good morning, everyone, and thanks again to my fellow panelists for making the time to join us. I don't think I'll talk much about the progress that we've made, because I think the guys have covered off the frenetic nature of what progress has been made in the Philippines, which is great to hear about and great to see. I think we would all agree there's more to do, and I think you've got a sense of the ambition from the guys around what lies ahead. Obviously now being part of the GBG business and working closely with financial institutions, not just in the Philippines, but beyond, about how we can help them onboard more consumers while preventing, especially fraud risk. We have conversations on a regular basis with financial institutions. And what's great to hear is what we've heard just now is not isolated to the three institutions that we've heard from. It's definitely a conversation that's happening more broadly across the industry. And it's definitely a segment that everyone realizes is both A, untapped in potential, but B, hugely important to the economic progress for the country as a whole. And maybe I just wanted to talk about, financial inclusion. We hear a lot about it, but it is fundamentally important to the social progress and the economic progress of the economy of the Philippines and other markets like it, with the emerging middle class. And you've got the younger generation coming through, needing to get access to credit, not just for credit's sake, but it's actually what you do with the credit. So it's buying the first house, buying the first bike, buying your first education degree, etc., that you need to do. So I think always important to remember that the human being on the other side of financial inclusion. I do want to, just for the sake of being controversial, pick fault with the title, which we call "Is Alternative Data the Key?" I think the point here is it's data. In the Philippines, it isn't alternative. It is just data. We don't have the luxury of the large-scale consumer credit bureau or corporate credit bureau for the SME side. So it's hugely important. We talk about financial inclusion. There's other kinds of inclusion that we should also mention around, insurance and things like that, where we have huge swathes of the population who are not included. So a subject, as you said, really close to my heart and something we feel very aligned to at GBG in helping our customers make progress. In terms of the blind spots, I think Mayet did a good job of talking about for the BPI Bangko branches, why are they not in the metropolis? Why are they all in the rural areas? And that is a huge blind spot, clearly. The agricultural sector and the rural sector is an area where we tend to find more unbanked. But the other area we find more unbanked is the millennials and the Generation Zs. So the ones who are coming into credit for the first time. And that's purely a function of the fact that these guys have never had credit before. And we see this in lots of the emerging markets in Southeast Asia. The people who get credit are the ones who have credit because they have the formal history. And what we're seeing with the Gen Zs and the millennials are that they don't have that access to credit. And that is where data, alternative data or traditional data is hugely important in helping them get access to the services that they need to drive the prosperity in the life that's ahead of them.
Thank you for that, Dave. We always appreciate some controversy, so feel free to stir some more if you find the opportunity. So yeah, I think there's some good points made over there, right? I mean, at the end of the day, we can't dehumanize the term financial inclusion. A lot of times, like Dave said, it's towards buying their first bike, their first home, education. These are all important things to enrich the lives and for the betterment of the citizens as well, right? I just want to maybe continue on the point of the blind spots in data and also the use of alternative data to address that. So I think, Joyce, like some of the things that Dave brought up, there isn't a centralized credit bureau. I think there is there? I think there was some progress made on that. I'm not 100% clear. So what is the view of BSP in terms of the use of alternative data to be able to assess the credit risk of some of these borrowers?
Yeah, definitely. This is something that the BSP supports. And just going back to the coverage of the formal credit bureaus in the Philippines, it's quite low based on the, I think, end 2020 data of our Credit Information Corporation. It's under 30% of the adult population in the Philippines. So that's quite low. So that's definitely a blind spot when it comes to financial inclusion, not having a formal credit record. And as I think it was Mayet who mentioned earlier, the Philippines is faced with a huge informality challenge. We have a huge informal sector, and we all know that being a member of the informal sector renders you invisible, to financial service providers. So, given their lack of formal work and institutional arrangements and the regular cash flow, so there's also, I think we're seeing a trend of more and more millennials not going into the employed sector, but choosing to go, in fact, not even choosing, maybe by circumstance, they are forced to go into the gig economy. And that also poses a challenge because if our financial service providers are only relying on the typical payroll-based solutions and credit decisioning, then that will definitely be a huge exclusion factor moving forward. So we have to look into how the informal sector, how to address the exclusion brought about the being part of the informal sector, and that's where alternative data can really bring a huge impact. But going back again to the data blind spots, I think we can look at it from two perspectives. You have from a service provisioning standpoint, right? So the lack of verifiable KYC, of course, until the FILS is fully implemented, this remains a challenge. And of course, I mentioned earlier the credit profiles. But from a policy-making perspective, from a regulator perspective, we're also faced with some blind spots in terms of lack of timely and granular data on our target sectors, whether that's the MSMEs, the farmers, and again, the informal sector. So lack of good data on these target sectors can impair the development of effective policy making and effective policy intervention. So without that data, it's easy to look at these groups as homogeneous and not recognizing that within these groups, there are subcategorizations with distinct challenges and needs. So I think it's also important to recognize these data blind spots from a regulatory perspective.
Thank you. So, as you said, right, there are still about 70% of the population that's not really covered by the credit bureaus. So, my question, just a quick follow up before we move on to Paolo, is that what forms of alternative data do you see the financial sector being able to use to potentially fill that gap in this space, Joyce? What are your thoughts on that?
Yeah, it's mostly on their telco, the telco usage, telco sourced data. Of course, also psychometric testing as input to assess behaviors on repayment and that issues towards repayment. So those are the, I guess, the more mainstream alternative data for credit decisioning that's been used. As you know, we've been called the texting capital of the world. So there's a huge mobile phone penetration, and lenders are tapping into that for alternative data.
All right. Thank you, Joyce. Thank you for sharing your views. Let's move on to Paolo. And I think, Paolo, I mean, companies like PayMaya, you guys do have a lot of very valuable data, be it from the merchant side, be it from the user side as well. Do you potentially, or have you already used this data to partner with banks, or is PayMaya looking at potentially expanding their financial services to involve lending or anything like that, Paolo?
So I'll start off first with PayMaya's experience, and then I'll bring the experience from a country that I visited and analyzed in detail, which is Kenya. So when it comes to us, we've actually already started to lend to small businesses at the beginning of this year. And we are lending to small businesses that we have unique data on. So these are businesses, sari-sari stores and hardware stores, and on the small to micro spectrum, businesses that do have a business permit and therefore are formal and have a storefront, but that don't have much, actually any credit history. And because they've been remittance agents of ours, for some of them for 5, 10, 15 years, and because they also sell bills payment services and airtime reloading for mobile phone services and several other financial services via us, what we've been able to do is we've been able to take that data, package it, and understand which of these we are very comfortable lending to. And it is a little bit of a tiptoed approach, a very conservative approach to lending, where we only do it in the cases where we are virtually sure that the money is going to come back, because we see their cash flows on a day-to-day basis, and we are actually able to tap into those cash flows if needed. So these are very, very easy customers to lend to. Expanding that to other customers is the next frontier for us. We're very lucky that we have a merchant base, both online as well as face-to-face, that uses us for several services that we can expand to. And obviously, we're very lucky that we have a consumer base that is that we have a lot of data on and KYC information on, that will make it very easy for us to lend to. To the point earlier that Ms. Joyce was making on telco data, I think telco data is absolutely critical. And the telcos, in fact, lend to their customers in terms of telco airtime every single day, every single week. So this is not something that is new. This is something that Smart and Globe and the other providers have been doing for several years. The challenge there is that you have a 95, 96% of the population that is actually on prepaid phones. So while it's quite easy for us to, derive patterns from it, it's also quite easy for someone to switch prepaid card very easily in the Philippines and to be nameless and very difficult to reach. And that's one of the key challenges that we have. Now, I know I've been talking for quite some time. If you don't mind, I'll spend 1 minute on Kenya. But in 2015, I had the chance to go to Kenya to meet with Safaricom and M-Pesa, being one of the key mobile wallets that defined financial inclusion in Kenya and really allowed a lot of Kenyans, probably half to more than half of the population, to be financially included in a way that was very powerful. And one of the key elements why they were able to do that, let's not forget, by the way, that the technology that M-Pesa used in 2008 onwards was already invented by Smart and Smart Money in 2001. So it was available in the Philippines. It's just a question of what other parts of the ecosystem were there and how well, the ecosystem was executed. And if you look at Kenya, what they did very well was everyone had a national ID number where if Vincent Fong wants to apply for a loan or a mobile wallet account, I know exactly who this person is based just on a 10-digit number without having to figure out whether that driver's license or passport or some other document is real or fake. The second big thing was that, and here I might get in trouble with one of my shareholders here, but in the spirit of what you said earlier, Vincent, of being controversial, I'll try and say this without getting into too much trouble. In Kenya, applying for a prepaid card, for a prepaid SIM card involved giving a lot of KYC information. And then applying from a mobile wallet involved checking a box. So if you are applying for a mobile wallet and all you need to do is to check a box, most cases you'll just say, yeah, why not? I'll do it. And then what that does is it paves the way for you to be financially included and for you to get credit. In the Philippines, getting a prepaid SIM card is as easy as basically going to any Globe or Smart stand. Hopefully a Smart stand, I'll need to say this so that my shareholders are a little bit happier. But hopefully a Smart stand and you get a prepaid card handing over sometimes anywhere between 0 and 20 pesos. So that really starts building your profile and starts ensuring that people don't hop around between one card and the other and therefore become much more credit worthy in the medium to long term. That was a long-winded way of saying that I think we're on the right track in the Philippines with the Philippine ID, with a lot of credit providers starting to work together. And I really think that the next 2 or 3 years are going to be a credit boom in the Philippines for everyone, not just for the 5% who have credit cards.
Thank you, Paolo. Some controversy is always appreciated. I'm sure your shareholder appreciate the fact that you plugged Smart over there as well. So thanks for sharing your views. Let's move on to Mayet to also get her viewpoints as well. Mayet, I also wanted to maybe dive into the differences between your main bank and the BPI Bangko, right? Are you using any different data model, or are you assessing the credit risk differently to kind of ensure more inclusion towards the segment over there that you guys are targeting?
Definitely, because you're dealing with a new frontier, so to speak. Still, even if we've been there for about 4 or 5 years, it's an ongoing process. And going through the SEME market, that's what we call them, the micro entrepreneurs. It is a totally different business model and a totally different perception of risk. If you are going to apply conventional banking risk analytics, they will never be able to get the services that you desire. So it's a something that most banks, if they're interested to go into this market, would need to have a 360 degree turn and change, at least for a segmented market niche, to do how to classify data, what data they would need, and to have alternative credit risk models, because it will not definitely meet the traditional risk models that we normally have, even for the retail customer, for an SME customer, more so for a corporate customer. So if you look at the blind spots and to Paolo and to Ms. Joyce from the PSP, we are so glad that there is a PhilSys initiative. We've been struggling so much in terms of getting reliable, accurate, legitimate KYC information in terms of onboarding. and mostly more so for mobile onboarding, which what the smarts and the PayMaya of this world does. No? And we do that too for SEME. And the main data that you need is really the KYC documentation. I agree with Paolo. In some other areas, in some jurisdictions outside of the Philippines, buying a prepaid card means giving up KYC, which is something controversial, maybe not, but from a legal and from a banking perspective and a stronger financial economy, you need to have KYC. Otherwise, the hesitancy to onboard customers that will not have that information will always be there, primarily for financial institutions, because we are heavily regulated, and there are rules that we have to follow in terms of AML, KYC, and all that. So it is what it is. This is the world we are in. So we have to use technology to have that. And I commend the BSP and the government as well, Fundanera, in creating the PhilSys. Finally, there is a supranational body that is really taking care of creating a uniform personal ID number for everyone, for every one of us. Now, if you are looking at data blind spots from our perspective and the business line that we are in for our microfinance institution, there are two general areas that we feel we should get some more information. And there are ways you need to be very imaginative on how to get it, because they are not legally or still not with the CIC, as Ms. Joyce said earlier. That includes payment data, and that's the advantage of the telcos dealing. And I agree with Paolo's statement that they have that distinct advantage because they work from both sides of the fence, either from the consumer side as well as the merchant side, and that's a great advantage. And aside from that, because you are still going to lend, and there is still the collection risk that you have to shoulder, you need to have alternative ways of measuring potential deposit balances outside of the institution that we have, maybe in the other banks, or even credit with the informal credit lending sectors. We have companies here in the Philippines that does informal lending outside of a banking regulation. You have NGOs that lend, but those data are really data proprietary to these institutions. And if you are going to do this in a mass base, or for the entire financial community to involve on, those data need to be shared. But we also have on one side data privacy concerns. So we need to balance those regulatory issues, the KYC onboarding issues, but still get some form of data enough to really make sense of how to profile your customer correctly using alternative forms. And also, I think for moving forward, and I don't know if everybody in the forum would agree, the use of artificial intelligence, the use of data lakes, of data analytics to really give you that information. So there's it's a new frontier for a lot of the bankers, but you need to be really very perceptive and find out on imaginative ways to get the information that you need.
Thanks, Maya. I wanted to jump to Dev, but before that, I think Paolo just wanted to quickly add a point to the conversation. Paolo, you wanted to add something?
Yeah, thank you, Vincent. I think one of the key elements there is the first step towards a credible credit market in the Philippines for consumers is the ability to understand who has already borrowed and not repaid. It's a very simple step. It would require effectively a centralized database of, Vincent Fong repaid and therefore repaid PayMaya, and therefore BPI is able to lend to Vincent Fong again. Paolo Azzola didn't repay company A, and therefore company B knows that and can lend to that person at their own risk and peril. In the Philippines, I think, and this is another relatively controversial statement, but probably the most profitable job you could have had in the Philippines in 2019, and this is not a job that any of us would ever want to have because of our own integrity, but the most profitable job you could have had in 2019 in the Philippines was to get a loan from every single loan provider in the Philippines and close your account immediately after. And that's something that is extremely scary when you're in the business of potentially lending money to someone. And so I do think that with the identification of people, which is the first step, and then the identification of the bad users among that community of people, at that point, everybody can start lending at rates that are much lower, because you can now start identifying who are the bad players and who are the good players, making it much easier for legitimate lenders to get affordable credit.
Thank you, Paolo. Now let's move on to Dave. And I think, Dave, there's a lot of points that has been touched in your area of expertise, right? We talked about KYC, we talked about bad actors, and that is really some of your domain. Maybe you could speak to some of the points that the panelists have brought up. Dave, you have the floor.
Yeah, sure. Thanks, Vincent. I would just say probably the second most profitable job then that you could have had in 2019 was being a fraudster in the Philippines, because we also, through the research we've done and a lot of the stuff that's widely available, we also know that as countries take financial inclusion more seriously, what does that mean? It means to reach the mass market, they have to bring new channels, largely digital channels, although also offline. And we also know that getting this right is a high revenue pool. So if BPI, Bangko, for example, crack this market, or PayMaya crack this market, or we know that there's a big prize for them at the end of the day. And that's a prize for them, but it also is a prize that attracts the fraudsters. And the fraudsters, let's not have this notion that there's some 16-year-old in their bedroom. These are highly sophisticated, organized businesses that look at market sizing just as we all do as large corporates. And these two things coming together, so more digital and new channels, which may be less protected than the previous walk-in with all your documentation channels that we were used to, and the fact this is a highly attractive space, means that we've definitely got a higher instance of fraud and a much higher risk of fraud. So far in the panel, we've talked about credit risk, but we should also talk about fraud risk, right? So as we start to look at less conventional markets for institutions, the fraud risks mutate a little bit and potentially become more severe. And the reason for that, again, is this common topic of data. So many of the data assets that are used to assess someone's creditworthiness are also the same assets that are used to assess whether this is a potential fraud, which has therefore meant for us as a business, we focused heavily on how we can help our clients onboard customers who may not have the rich credit file. Looking at things like keystroke behavior on the application, looking at things like validity of email address. Was it just set up yesterday? Looking actually in the case of the Philippines, which is a mobile first market, looking at the actual handset itself and does it contain malware, and looking at whether there's any potential risk around SIM swap or the SIM that's being used. So I think we talk a lot about the credit risk side of it, and that's very, very important, right? We don't want our financial institutions to lose good money in bad loans, but equally we want to make sure that we're protecting at the gate our consumers from being defrauded, but also making sure that we're not losing high value sums of money to fraudsters who are then using it for illicit purposes, such as their own predatory lending schemes, or beyond that, more serious things like terrorism. So it's a really important point that I wanted to raise, given we've spent most of the topic talking about credit risk.
I think that's an important point, right? Because at the end of the day, if you have someone who is just about to formally enter the financial system and then they get frauded, nothing is more detrimental to the goal than that, because the trust in the financial system really gets eroded as well, right? But just to maybe quickly follow up on a few points on what you spoke about, Dave. The other dimension to look at this is that a lot of times these people may not be the most digitally savvy portion of the population, right? So you want to be able to make the onboarding as smooth as possible. Otherwise, they might just drop off halfway through. So from your viewpoint in GBG, how do you kind of balance that need to protect the users and also creating a smooth and easy experience for some of this population to join this, be digitally onboarded?
It's a good question, and you're right. At the end of the day, all of the institutions that are in this space looking to target these new consumers have to have a really slick, effective onboarding process that's consumer friendly. And so what we help our consumers do is advise around what exactly do you need to collect to be as quick as you need to be and as effective as you need to be without overburdening the consumer with providing thousands of documents along the way. And obviously there's lots of data points behind that around consumer behavior. We know that the amount of time somebody will happily submit an application on a handset is different to a laptop, etc. So there's an ability to tune the onboarding process. But I think the key is collecting enough information without overburdening The point around digital savviness, I think, interestingly for the Philippines, we know that 70% of the population is under the age of 30, and we know that they're all digital first. So actually, I think the point here will be making it something that can be done soup to nuts on the device instead of needing to come into a branch, etc., etc. But yeah, it's a really good point that whatever processes we put in place has to play to how the consumer wants to interact with you.
Thank you for that, Dave. Now, I just wanted to move on to Joyce to also talk about the topic of fraud as well. Now, a lot of those who are being formally included in the system for the first time may be more vulnerable to these bad actors, right? Because they may be a little bit more unfamiliar with the system. From a regulator viewpoint, what can we do to better protect these new users?
Yeah. Of course, we always say that financial and digital literacy is obviously
Apologies, Joyce. The audio is a little bit soft. You might need to
sorry.
bring the mic a little bit closer.
Okay,
Perfect. Go
sorry.
ahead.
How do I sound now? Better? Is
Much
this
better.
better?
Yep. Go
Okay,
ahead.
great.
Perfect.
So, right. So, when it comes to fraud protection, it's we always say that financial and digital literacy is very important. We need to arm the vulnerable sector with sufficient knowledge and skills to spot and avoid harmful situations. So we're happy to note that in the Philippines, the Department of Education just recently also issued its department order, basically institutionalizing FinEd concepts, including protection against scams and all these things in the basic education curriculum. So that's a good step moving forward. But of course, this doesn't mean that regulators and the financial service providers themselves don't have a role to play when it comes to protecting consumers. They definitely have a huge role to play there. And of course, the BSP, our handle there is through our regulations. And for the FSP, our consumer protection framework expects these FSPs to have the systems and policies in place to effectively identify, manage, and monitor the risks that their clients face in the use of their products. So, in short, it's really literacy, promoting financial and digital literacy, and coming up with responsive regulations and ensuring that the FSPs have the tools to manage and protect their risks and protect their consumers from these harmful elements that may dissuade them from continuing to use financial services. I'll pause there. Thanks.
Sure. Thank you for that, Joyce. Now, before I move on, because I actually wanted to talk a little bit more about some of the regulatory initiatives, and I wanted to direct a question at Joyce. But before I do that, is there anyone else from the panel who would like to add a little bit more about what further steps we can take to, prevent the users from being fleeced from their money or being a victim of fraud? Paolo, Maya, Dev, and any points to add in this conversation before I move on? Paolo, yes, go ahead.
Yeah, so I think there's obviously a responsibility on the part of the financial providers to make sure that accounts are as secure as possible. And that's something that we spend a lot of time, money, resources in figuring out. Also, we're not the first people to try and solve that problem. BPI and PayMaya are clearly just two financial institutions across the entire world. And I'm sure there are other financial institutions that have spent even more time and resources than us in trying to figure that out. So we do look at best practices across the world, mainly in emerging markets, so that the patterns resemble ours a little bit more, in trying to understand what's the best technology to marry to the best user experience for a customer. The reality is that in my experience, the more locks you put on a particular vault, it just means that it gives fraudsters the ability to open more locks. If you as a customer are willing to give an OTP out to a fraudster and a password out to a fraudster, you'll be willing to also give your fingerprint, all your biometrics, everything else. It's just a question of how many text messages that fraudster will take in order to get there. But at some point they will get there. So the question is educating the market and educating them as a whole. So I've actually been a part of trying to work with other banks and other financial providers, as well as, of course, the BSP, in educating the customer base that certain types of information are not to be shared to anyone. And so that, I think, is probably the biggest portion of the work that we need to do in order to make sure that customers don't hand over their information or are not vulnerable to fraudsters.
And I think that's true, right? The users are always the last line of defense, and not just normal users. I mean, a bank in Singapore, the employee accidentally fell to the tricks of one of the fraudsters and revealed a lot of customer private information, right? So that speaks to how, if a banker could fall for it, the normal consumers would probably need a little bit more education from the providers in this space. So before I move on to talk about some regulatory initiatives and industry initiatives towards the goal of financial inclusion, Mayat, Dev, anything else to add to the conversation of user protection? Mayat, go ahead. You have the floor.
Yeah, at the end of the day, the worst, really, your weakest link is your greatest risk. So, no matter how many times you tell or send SMS to clients, in all platforms, PayMaya included, I think. Not I think, I know. You put up an SMS telling you, please do not give your OTP, please do not give it, because we will never ask for it. People will still fall for it. So fraudsters are more imaginative, I guess, than most people, and they provide you some, very imaginative ways as well, and very, I don't know whatever fraud that they tell you, but every time, I mean, you can always send all those SMS, emails, posts on your websites. It still happens. So the dangers that we've seen, not only from the customer themselves or the direct account holders, are really also from mule accounts that have been sold in the dark web, that has now been created or is now being managed and controlled by fraudsters. And from the side of the bank, you need just to have stronger transaction monitoring, because as far as you know, you're still talking to ABC, but in fact, behind ABC is DEF. So transaction monitoring is always an issue, and fraud control. It takes a lot of resources, both financial as well as from the IT side, to do that. But I think moving forward, as we go to a digital economy, there's not much choice but having to put those resources in place.
For sure. It sounds like education and data is still the key in this particular goal. Thanks for that, Mayat. So before I move on to that, Dev, do you have anything to add to this particular Yes, go ahead.
Just quickly to say that in the research that we've done at PBG, we've also found that that folks who are financially excluded are also more at risk of falling prey to some of these financial crimes. So I think it's it's a double-edged sword, actually.
Yeah.
We find that young males especially are the ones who are most susceptible to fall to some of the fraudsters, and they're probably the greatest proportion of people who are trying to get into the formal economy as well. So it's it's an interesting challenge for us all.
For sure. It sounds like beyond just making these services available, being able to assess some of these data points, we also need to make sure that we are taking active steps to provide this safest service possible for this very vulnerable population as well, right? Thanks for that, Dev. So now I wanted to kind of talk about potential regulatory initiatives that the country should look at, because I think some of the things that were being shared were related to open data sharing, a lot of initiatives that could potentially help, right? So my question is directed at Joyce. Joyce, what kind of maybe you can walk us through the kind of regulatory initiatives that BSP will be prioritizing over the next 5 to 10 years, or maybe even by 2023 to kind of hit that very ambitious goal of the regulator. Go ahead, Joyce, you have the floor.
Yeah, thank you. So I guess it goes without saying, the implementation of PhilHealth, of course, it's not a regulatory initiative, it's an infrastructure initiative, but that's going to be the biggest game changer when it comes to digital financial inclusion. And I guess there's no need to belabor that point. I also like to share that just recently the BSP also issued the open finance regulation. It's circular and open finance framework. That also signals where BSP wants to take this, data empowerment. So the idea for the open finance is really to ensure consumers, the one that will generate data, have power over the use of their data and to use their data for their own benefit. So the open finance framework is meant to catalyze the development of that ecosystem that will promote leveraging of consumer data to promote financial inclusion. Of course, we also just recently issued the digital banking framework. So digital banks are now considered a standalone, a distinct banking category, and that's meant to also boost dynamism in the financial services sector by attracting, the digital savvy and digital native financial service providers to join the ecosystem and provide innovations and further innovations in the financial services sector. So those are just some of the milestone regulations that we have recently put in place that we hope to further catalyze financial inclusion in the Philippines.
Thank you, Joyce. Thank you for that overview. Now, maybe I will pass this to the rest of the panelists to look at maybe a regulatory wish list, industry wish list of what could potentially be done towards this goal. Paolo, Maya, Dave, any of you would like to add to this? No wish list, everything's perfect. or should we ask Joyce to turn off her speaker for a while so that you guys can speak freely? Sorry, Maya, are you trying to say something? I think your mic is muted.
Okay.
Go ahead.
We are, well, banks are, as you know, is heavily regulated. So we do follow those, the requirements of our regulator. But it is not to say that there is not much opportunity there. I think banks just need to know and provide some improvements in their processes and their operations for you to work in the new normal. I think most of us are in common, we have the same common goal of banking people, whether it is through the regular banks or making financial services open, whether it's through e-money to other fintechs. I think we're both there. But my problem, and it's a fairly recent problem, is when the Philippines got back into the FATF gray list and how it would impact the way we do business again. It is some of concerns for us because of the greater scrutiny that we would be asked to have and provide in respect of the transactions of our customers. I'm going to be very blunt, very honest here, and sometimes there is difference on the way the regulatory expectations are for banks vis-a-vis other players in the industry. And the regulators would have some purview towards that. And I think all of us are just trying to make it an even playing field so that people can really just have a free choice of where to go. You go to an e-money provider, you go to a wallet provider, you go to a bank. It should just be the same. So nobody is leveraged against given the new set of regulations. But at the end of the day, the regulators would have to have a say on how we do our business. And rightfully so, because we're really playing with other people's money. So it is rightfully our fiduciary obligation to do so. But it would help if there are some realization on some of the regulations. And I think that's consistent with across the industry, but we understand where the regulator is coming from.
Thank you, Maya. So I guess what you're saying is that you would like to look at a more even playing field in terms of the... Yeah, got it. Paolo, you wanted to add something? Go ahead.
Yeah, thank you. So first of all, I have some good news for Maya, which is that we will be leveling the playing field ourselves because we apply to our bank. So hopefully we'll be a BSP regulated bank very soon also. And that's something that is not at this point.
Really?
But so that will level the playing field quite a lot, I think. But I'm going to take a slightly different approach here, which is that I do think that and I'm never going to get tired of saying this. Every time I have to speak on a panel, I have to make the same point, which is I think we're extremely, extremely lucky with the level of alignment between our regulator and the most progressive players in the country. I don't think that's true with many other countries, especially in the rest of this region. And I do think that the BSP is extremely helpful when it comes to understanding how to get more people to get financial accounts, understanding how to provide a much better service to them, and at the same time working together with us to make that all available to them with much easier distribution, better technology, and a much safer environment. So I'm never going to get tired of making this point, and I'm very thankful for what the BSP has done over the last 5 years.
That's a point that should be continued to be made consistently. But Paolo, just to confirm, are you saying that you are applying for a digital banking license at PayMaya?
Yeah, I think that's in the public knowledge already. But yeah.
Okay, perfect. All right, got it. So let's move on. And Dev, do you have anything else to add to this particular conversation about regulation?
No, I'm good, Vincent. I just think the fundamental problem here is there's an increasing demand for credit. There are people who are ready to supply that credit, and the regulator's job is to connect supply and demand and whatever regulations make sense in order to do that and protect those in the economy is I'm sure, the focus of the BSP. So nothing else to add, really.
Perfect. So while I still have you on stage, and we are running low on time, so maybe we'll move on to closing thoughts. Perhaps you could share with us how you see the space evolving, or any important points you felt you haven't had the chance to bring up during this conversation. You are welcome to do so now, Dev. Go ahead.
Sure, and I'll keep it brief, but really was interested in hearing Paolo say earlier on in the conversation around how the PayMaya business has been focusing on where they have unique data sets on consumers or MSMEs. My prediction, and it's not a bold prediction because I think everybody thinks the same, is that companies like PayMaya will branch out. So they'll go beyond where they have a unique data set. And my hope is, and this is a bit to the regulatory question, they will see more sharing of data across the ecosystem, because at the end of the day, the financial imperative here is a social one, and I think we all have a role to play in enabling that social progress.
Very cool. Thanks, Dave. Since we have Mayat on top, Mayat, maybe you could share with us your closing thoughts and maybe some points that you feel like it needs to be highlighted to the audience before you go.
Yeah, critical. I agree with that 100%. Sharing of data is primary information. We have a CIC, which is the government-owned corporation that controls supposedly credit information. But what we've seen is we would like to see acceleration of sharing of information. Financial institutions, telcos, utility providers should also be able to upload data. But we are also cognizant that there are privacy issue concerns and related to the open banking initiative of the BSP. So at the end of the day, the consumers would have to have control of their own data, which from the side of a user or the consumer of data from our end makes our life a bit more difficult, because consent would have to be required. However, if there is one vault of centralized information, not only from the credit side, but as well as for the services side, that will give us a huge set of information that we wouldn't have originally had we not gone to the CIC. So we hope the CIC being pushed forward and really making sure that every available entity that should be sharing their data through their portal.
Thank you, Maya. And Joyce, your closing thoughts for the day?
Okay, so I guess moving forward, we would expect more collaborations and partnerships between FSPs, digital platforms, not just credit bureaus, and even government agencies, because they store a lot of consumer data as well. And the idea of this collaboration is really to support intelligent and responsible use of consumer data. And the objective, of course, is to optimize consumer outcomes, right? We're doing this with the consumer's benefit in mind, giving them access and choice. And with that access and choice, we also hope to see consumers being more active agents in shaping the digital finance offerings, being an agent of change as well in the digital financial services ecosystem. So catalyzing innovation, competition, those things. And I'm also excited to see the innovations that will be built on top of the Philippine ID system, our digital ID system. Hopefully, it brings about more platforms that will facilitate data sharing that Ms. Maya earlier mentioned, and other platforms for financial inclusion. So thank you again for inviting the BSP to this forum.
Thank you, Joyce. It was a pleasure to have you. Paolo, what are your closing thoughts for our audience today?
Yeah, so I think that as we move away from paper fiat currency, as we move away from IDs that are not verifiable, and as we move into a much more transparent credit sharing system, all of this, let's say, digitization of information can only allow more people to benefit from the ability to get effectively quality, easy financial services. And that's something that we very strongly believe in. And we've partnered quite heavily together with both the BSP and institutions like BPI and other banks in trying to create a Philippines that is a lot more interoperable, and where money movements of all types can actually be a lot more seamless for the end user. As you allow money movements to be more seamless between different players, whether it's government, enterprises, or consumers, you obviously enable those users to do so, to exchange value of money in digital platforms. And the more that is true, the more data there is for us to make informed credit decisions using both alternative data, which I think obviously Smart and other telco providers have a head start on. But also, to Dev's point at the beginning of this panel, was it's not just about alternative data in the Philippines. It's also about harnessing just the data that is not alternative and is pretty basic. So I think the digitization of all of that and the interoperability between partners like PayMaya and BPI with the supervision of BSP, I think can only go in one direction, which is more people included financially and better.
All right. On that note, it's the perfect time for us to wrap up this session. I'd like to thank all the panelists today for really sharing all their thoughts with us. It's been a good learning experience for me. I didn't even realize it's been an hour. So with that, I would like to thank the audience for tuning in. We hope you've learned a lot from the session we had today, and have a wonderful day ahead. Take care now. Bye-bye.